All right, so you've probably seen the headlines about Chipotle's latest earnings report, right? They sound amazing. But, those huge numbers, they can sometimes hide what's really going on. So today, we're going to peel back the foil, look past that record-breaking revenue, and see what's actually cooking inside their financials.
I mean, everyone knows Chipotle. They're an absolute giant in the fast casual world. But the big question is, how healthy is the business really? Well, we're about to find out. We're going to dive deep and dissect their performance from this most recent quarter.
And wow, that headline number, it's a doozy. $3 billion in revenue in just a single quarter. That's a first for them, and let's be honest, that is a massive number no matter how you slice it.
So, you see a number like that, and you've got to ask, what's the problem? I mean, they're raking in $3 billion. But that's exactly why we're here. Because it turns out that huge, shiny number is kind of hiding a much more complicated and, frankly, more interesting story. Okay, so let's start with the good stuff. Let's see why all the headlines were so positive. Because on the surface, the growth looks absolutely fantastic.
Their total revenue is up a super healthy 7.5% compared to last year. Now that's the kind of number that makes investors really happy. But here's the key question. Where is all that growth actually coming from? Well, a huge piece of it is pretty simple. They're just getting bigger. Chipotle is on an absolute building spree. We're talking nearly one new restaurant opening every single day. Of course, your revenue is going to grow when you do that. But what about the stores they already have?
And this is where things get interesting. This is where we find the real story. See, to really get a handle on the health of a company like this, you can't just look at the total growth. No, you have to dig in and look at the performance of the stores that have been open for a while.
The key metric for this, and you hear it all the time in this space, is comparable restaurant sales. Most people just call them comps. Basically, it's a filter. It ignores all the shiny new stores and just tells us how the established locations are doing. Is the core business actually growing? It's pretty much the ultimate health check for a chain like Chipotle.
Okay, get ready for this. Here's the big contrast. While their total revenue shot up that impressive 7.5%, the growth at their existing stores was a tiny 0.3%. 0.3. I mean, that is basically flat. Suddenly, that amazing growth story doesn't seem so simple, does it?
But wait, we can go even deeper. So where did that tiny bit of growth even come from? Were more people walking in the door? Or was it something else?
And boom. Here's the hidden problem. The only reason that number was positive at all is because they raised their prices. The average amount each person spent went up by 1.1%, but, and this is the really important part, the actual number of people coming in, the transactions went down by almost a full percent. So fewer people are actually eating at their existing restaurants.
This is a classic leaky bucket problem. Think about it. Chipotle is pouring tons of water, that's new customers, into the top of the bucket by opening all these new stores. But the bucket itself, their existing restaurants, has a slow leak. People are trickling out.
So yeah, losing customers at your core stores is a huge challenge. But that's not all. The company is also getting squeezed from the other direction. Rising costs are starting to take a real bite out of their profits.
So when you buy that burrito bowl, ever wonder where the money goes? Well, here's a breakdown. For every dollar they make, about 30 cents goes right back out for food, drinks, and all that packaging. Then another 25 cents goes to pay the people working there. By far, those are their two biggest costs.
And that biggest expense? Labor is getting more expensive. Wage inflation is a real thing, and it means labor costs are taking a bigger slice of the pie than they did just a year ago. Now, it might look like a small change, but think about it. On $3 billion in revenue, even a fraction of a percent adds up to millions and millions of dollars.
And it's not just about wages. The price of beef and chicken keeps going up. They've got new tariffs hitting their supply chain, and on top of all that, they're having to spend more on marketing just to try and get people in the door. All of these things are squeezing their bottom line.
Okay, so the picture's pretty clear, right? Customer traffic is slowing down and costs are going up. So, what's the plan? What's Chipotle going to do to fight back and get things growing in a healthier way?
Let's hear it straight from the CEO. There's a lot of corporate speak here, but the most important part is that last bit. Get back to driving positive transaction growth. They know it. They absolutely know that fixing that leaky bucket has to be their number one priority. So let's translate that for the rest of us. It really boils down to a four-part plan. 1. Just keep building new stores, and do it aggressively. 2.
Make sure that over 80% of those new stores have a ship a lane, that's their drive-through, because those locations do way better. And finally, parts 3 and 4, sharpen up their marketing and innovate the menu. Basically, create some buzz to get people excited again.
All right, so they've got a playbook. But the real question is it going to be enough?
And this might be the most telling thing in the entire report. It's the company's own forecast. They are basically telling everyone that they expect sales at their existing restaurants to actually decline for the whole year. They're admitting that the leaky bucket problem is probably going to get a little worse before it gets any better.
So there you have it. That's the real story hiding inside those big, flashy numbers. It's really a tale of two Chipotles, isn't it? On one hand, you have this aggressive expansion plan. On the other, a tough fight to fix the core business. And that leaves us with the billion-dollar question. Can they keep building hundreds of new restaurants while also figuring out how to get more people to come back to the thousands they already have? That's what we'll all be watching.